Well, I know this time of year, we're all getting excited for Halloween tonight, then it's the holiday season, and there's lots of joy and merriment around this time of year. And a conversation that's not necessarily the most joyous, but it is a very important topic of conversation, is that of life insurance. We've got Hunter Emory alongside State Farm to talk a little bit about life insurance and why it's such a great gift that especially grandparents can give their grandkids.
Yep. Well, thank you for letting me be here today, and happy Halloween to you guys, everyone out there.
Yes.
But the gift of life insurance. So we talk about a lot of times with our grandparents and parents about giving the gift of life insurance to their children. It's a great opportunity to set them up for a financial future that has an asset with life insurance that allows them to have it early on and have the insurability to have it early on, and creates cash value and insurability through that cash value to allow them to have that life insurance in place for a long period of time they can use later on in life. God forbid they have to, but they can take those cash values out and use them towards any type of loan or withdrawal for anything they see as a need.
I think it's important when we talk life insurance too, and you're bringing up the cash value part of it.
Yeah.
The words life insurance don't necessarily sound like an investment,
Right.
but it is in a lot of ways an investment. So explain why getting in early, young, makes a difference.
Yeah, so we talk about dollar value of money, time value of money. And when you get in early on, you can build that interest rate that it has internally inside that cash value. It compounds and grows for that child, that they'll be set up in a very successful financial position later on in life because it's had time to grow. They've invested in early on into the plan. The other piece is insurability, and that's a big piece I talk about because a lot of times, unfortunately, people become diagnosed with different things as they go on throughout life, and they become uninsurable. They begin in a situation where they are not in a place where they can purchase life insurance any longer. But by purchasing it while they're young and still healthy, you can set them up, they can have that plan in place, and we won't have to worry about going through that process later on. They don't have to worry about being denied. They've got it planned now.
That's a really great point, and it kind of leads me to believe there might be other things about life insurance that are either sort of common misconceptions or maybe things that people just don't know about life insurance that you guys kind of walk people through when you have this conversation. Are there some things that people are often surprised to learn when they have this conversation?
Yeah, I think one of the biggest things is insurability. You mean I can be denied for it? I decide I want to buy life insurance, but you're telling me this is a contractual agreement between the two of us here that could happen. I think the second one is everyone thinks that when they buy life insurance, they think of it as a term policy. All the plans we purchase for children are permanent life insurance plans, whole life insurance. All right, so those are plans that are going to be in place when their heart stops. Whether that's today or 110, it's going to be there for them. They think of it as term life insurance, which is a short amount of time, and they also think of the expense, and that's the biggest thing. They think it's going to cost them $200, $300, $400 a month. These plans are not expensive at all. These are $20, $30 plans you can set up for the children, and you can add to them as you go along. We have riders on our plan that allow you to increase the death benefit, allow you to increase the cash value amount inside the plan, and it's not like you're locked into one set amount for that period. You can increase as you go along. There's also the assumption that it's going to go up over time. It's going to cost me more as they get older. That's not the case. You can lock in the rate now. It's based on age and health, and we have that in place for that child. They'll always have it there. They can also hand it off to the child at a certain point. They say, you can take this payment on now, or we can have it paid up in a certain amount of time. A lot of folks think too that I have to hand this burden off to my grandchild one day. We can set these plans to be paid up in 10, 20, 30 years, and then they don't have to worry about it. Another great value that we talk about too, finally, is education. They can pull that money from the plan and use that towards education needs. Now, it'll be a taxable event when they take the money out, but they can pull that money and use it if they can't qualify for FAFSA or they don't have a 529 plan, or they think too, hey, I don't want to use it for education. My grandchild wants to go into business. They want to go into a trade. You name it, we can use that money for anything they see a need for.
Wow.
It's really flexible in a way that I don't think a lot of people understand, and it can be used for so many things. And starting younger, as you've been saying, it makes such a big deal because you are accruing that interest every year.
Correct. Every year that thing is compounding, and you'll get statements every year showing that. And there's different options we can do with it too. We can put it into a situation, we put it in the market, the stock market, if you want to go into the marketplace and do something with it. A lot of times though, with my children, I'd like to keep that very risk adverse, and we look at a locked in account that's getting a better interest rate than any savings or money markets out there.
I mean, that's a lot. I feel like I just learned a whole heck of a lot about life insurance that I definitely did not know before. Is there anything else that people need to, kind of know or prepare for before they give you a call and have this conversation?
Yeah, I think it's best to also, if it's a grandparent, talk to the parent. Talk to,
Right.
We need them to sign off on an application. We need social security numbers. We need to know a little bit about that child. You can't just walk in and say, I want to insure my grandchild. We're going to have everyone else involved in it too. I think it's number one. Number two is, think about what do you want to leave to them, or what do you want to bestow them? Is there a certain number you have in mind you want to have available to them when they turn 18? Because a lot of times they walk and say, I want it. Well, what talk me through? And that's when we have to start peeling back the onion and getting that information out of them. So come to me with a goal that you set forth that you want for that child, and then we can help build that plan for you.
Wow. I mean, it's a lot of great information. And if folks are, maybe kind of preparing to have this conversation with their kids on behalf of their grandkids, and they're ready to give Hunter Emory here a call or check you out online, where should they go to kind of start setting up this conversation?
Yeah, so our website is savewithhunter.com or 302insurance.com. And then our phone number is 302-855-2100. And we're located in Milford and Georgetown, Delaware.
Fantastic.
Well, on this spookiest of days, do not get caught without life insurance. It's a great way to, again, build wealth, especially for the younger generations. If your grandparents, if the parents want to get involved in that, it makes a big difference.
Yeah, absolutely.
Like you said, it is the gift of life insurance. So definitely a conversation worth having. So Hunter Emory, thank you so much for being here today.
Thank you.
And thanks for what you do, for everybody in the surrounding area.
I appreciate it. Thank you, guys.
Of course. Coming up on CoastLife, though, maybe you've been thinking about the world of real estate as a career. Well, we've got some more things that you need to know before taking those first steps. That's coming up.